Check, check, mic check. All right, looking like we have some good volume here. Let's go ahead and get started. Good evening, everybody. Hope you're having a good weekend, and I hope everyone's well rested. We're going to be taking a look at the markets and preparing as we do every Sunday. Had a wild week yesterday, or this whole week, and we got our upside targets based on what we saw this past week. We were looking across markets, and price played out exactly how we thought it would. So this next week is going to be a little tricky. You're going to need to stay a lot more nimble now that we've gotten our six sister on ES to break all-time highs. And yeah, let's go take a look at the charts and see what's going on there. Hope everyone's doing well. Let's go head over to the charts. So as we all know, this past week we got dirty by looking only at Forex Factory and this not showing us CPI, right? Hey, what's up, Jay Whitway? Glad to have you here. Let's do some market prep. So, as you all know, when we took a look at Friday, we couldn't see any news, right? Because we were only checking Forex Factory. So we got dirty at 8:30 a.m. when we naturally had CPI last week on Friday. There was a CPI seasonal factor revisions that wasn't on Forex Factory, but it was on other calendars. So even though Forex Factory has a nice visual, something's up with its data. So I'm going to keep Market Watch up as well as Forex Factory so that I can get a sense of like, hey, check and see if there's anything we're missing, right? So Forex Factory, we know we've got CPI. Monday, we've got Fed speakers. Tuesday, we've got CPI in the morning. Wednesday, we got a Fed speaker. Thursday, we've got unemployment claims in the morning, industrial production at 9:15, followed by Fed speakers. And Friday, PPI as well as preliminary U of M and housing starts especially too. So pretty packed week. Nothing out of the ordinary on this week. Market Watch says it's roughly the same things. Fed speakers, combination of CPI, retail sales, things of that nature here. So for the most part, the Forex Factory is correct. So we can trust this one this week. So let's take a look over at the charts now. You'll want to refer to those throughout the week, and we will each and every day take a look at those. So let's take a look at NASDAQ. So NASDAQ on the weekly charts first. So we can see that we breached this all-time high a while back in the previous couple of weeks, and now we've displaced higher with that move up. This is akin to a candle close above here is kind of akin to displacement. Now, if we end up getting a big black candle down, that will, on a weekly chart, that will indicate that we have taken buy side and we're now ready to take sell side. Now, one thing I want to point your eyes out to real closely here on the weekly chart. Remember, I have been saying I have not been short at all this entire time, right? In fact, I've been pointing out that we have higher short-term lows, higher short-term highs, higher short-term lows, higher short-term highs, and now with this weekly candle being completed, we have a higher short-term low on the weekly chart. So, and we have displacement above this monthly long-term high. We want to see on a weekly chart if we can potentially trade all the way back down to that. That's a possibility. Or we trade to that IPTA high. That's another possibility as well. That's a really important high there. We're right at the new week opening gap right now, so there's nothing. We traded down at the open, at the opening bell. We traded down about 30 handles, and then it instantly got bought back up. So, and we're seeing accumulation occur right this very moment. So it's going to be a tough week to say, hey, which way is it going to expand? I think we're going to be in a tug of war between people who are starting to go short versus people who are thinking that this is going to ride. But at the end of the day, we need to see where this weekly candle closes. The thing that I'm watching out for the most, the thing that scares me the most is, and not scares me, the thing that actually excites me the most, I would say, is the fact that we created a higher short-term low on the weekly chart. So why is that really important to me? Well, that means that we no longer need to wait for this short-term low to be broached before we can consider a weekly chart to be bearish. If I see this have a massive candle down into and through this inversion fair value gap, or rather this balanced price range down here on the weekly chart, that's going to be my indication that it is finally time for the price to go short. But until that happens, I will assume that we are still in a bullish trend. We can certainly retrace into this segment of the weekly candle. So let me zoom in a little bit further. So you can kind of see how these past 3 weekly candles, we have a short-term high here, short-term low formed, and now we've breached above that high. So I think that this whole segment here is fair game for us to trade down into. Do I think that it's more likely that we break above the high of this week and expand above versus break down to the low of this past week? Yes. At the end of the day, I still think even if we head down into this region, it is more likely that we bounce off of or mitigate off of this IPTA high, this 17,794 high, and then continue higher. But it remains to be seen what's going to happen. It remains to be seen what's going to actually happen there. But I would prefer, if we are still bullish, I would prefer us to trade down first, and then maybe 50% of the way through this weekly candle. So that puts us at roughly 17,811 would be the lowest. I would like to see that trade maybe a little bit lower than that to hit that mitigation block here. I think that we could trade potentially all the way down to there and then head higher from there. So again, that level was formed by taking this weekly candle's equilibrium point, 17,811. So if we have 17,811, there's a good chance we could head a little bit lower than that, maybe like dig a little bit deeper into this optimal trade entry here. Maybe also targeting the close of this previous week. So remember, we have the open, high, low, and the close, right? Those are all going to be key levels. So these are levels that I'm going to be watching very closely, especially given the nature of this previous week's range. So that is where we are at on the weekly chart. On the daily chart, so let's go down to the daily, and we do see that we traded down into this buy side imbalance, and we traded immediately to this weekly balanced price range, shot back up, traded upwards, could not make it down to this bullish order block, but rather, like, this is a balanced price range, right? So rather we took to that IPTA, this 17,794, and we rocketed up on Friday. So where can we go in the coming days? Well, we are above this long-term high. So this is on the monthly, right? So we need to keep that in mind, that this might be on a monthly chart. This could be a spike above just to get late longs in, just to drop them short. Now, we haven't seen evidence of us head back down to it, but if you look real closely, so here we have a fair value gap right around that area. So it wouldn't surprise me if we traded down to the consequent encroachment of this bullish order block's wick here. Consequent encroachment of this wick will be important as well, and of course this buy side imbalance itself. So these are where I see initial part of the week draw on liquidity. However, there is, I think there's an options expiry. Let me see. Let me see. So there's. Let me take a look at the calendar here for options expiry. January, February dates. So we have options expiry on. We have weekly ones, of course, and then there's a monthly. No, that's not the right chart. Here we go. So February, we have options stop trading, options expire on the 17th. So at the end of this week, options expire. There's a holiday here. Okay, good. So this is a particularly interesting week because there's either going to be options, large amounts of flow that are expiring that could take us into a different direction. So we're going to keep in mind this week. We need to see how these different economic events trade. We are very much so at a high here. So if we're going to head higher, we need to see a little bit of a movement lower in the first part of the week, maybe the second part of the week, and then maybe like we see a Wednesday reversal or Thursday reversal, or we see some ridiculous movement because we have so many economic events this week that it is hard to keep track of. So we are still bullish. We do know on the daily chart that we now have a new swing to consider. Really, this original swing here because there's nothing on the daily chart, but from a weekly perspective, we now have a short-term low, which we can take as a initial swing here. Technically, this swing is our swing high, short-term high to short-term low that we have to consider. So we don't see anything on the daily yet, but if we look at the 4-hour chart, we can get a better sense of where we might see some next weekly swing ranges. So this is the last one that had a really pronounced movement higher. So if we were to consider the 4-hour chart, we would look to see price potentially head down into this optimal trade entry area. There is a bullish buy side imbalance, sell side inefficiency that we did not trade down to. That would be quite a bit of movement since this was a balanced price range. We displaced higher and we traded in this tight range for quite some time. So if it does go down, it may not head all the way back down there, but it may head instead to either this little fair value gap down here, or I think there's a volume imbalance right there. Let me see. Yeah, there's a very, very, very small volume imbalance at 17,914, around 17,914 area on the 4-hour chart. In fact, there's one that's 17,939. So those all are going to be referenced if it heads down there. So let's check the hourly chart to see if there's anything here. Right now on the 4-hour chart, this is all we can see. We know that we're in a deep premium and that price is unwilling to head deeper into some of these areas. So look at this swing here. Let me remove this. So we can kind of see how this was the previous swing on the 4-hour chart. We only got to roughly around 40. We just dipped below 50% there, didn't get to optimal trade entry, and then headed higher. And then we continued to not breach that 50% mark before displacing higher. That's important here because we have this kind of range where we continue higher and higher. We're now well above a market maker model that we see here, right? So we've had, and it'll be easier to see on the weekly. So let me go to the weekly chart. So we now had the original consolidation here. And we have distribution, accumulation, and then we broke original consolidation. So we finished a weekly market maker buy model. So the question will be now, hey, where will it head next? So we assume it's going to head higher until it starts to see a weekly consolidation. Then we might start to see a potential shift in market structure. Right now, there hasn't been a shift in February. And remember, in the beginning of the month, Februaries are generally bullish. Until something triggers, until there's some major thing that triggers the market to switch directions, generally you're gonna see this type of move in the beginning of February. Mid-February, we could see a drop, but if we don't, we might see some FOMO type buying go into play, and you'll see that all-time highs tend to keep going all-time highs and making new all-time highs as we continue to get people to try and short. They get squeezed out, they have to buy back, and then smart money's squeezing that upwards as well to continue squeezing out shorts. It's going to be an interesting time. So I wish I had this here. Did I keep this on? Yes. So I'm looking also at the commitment of traders here, and the commitment of traders, there were less net shorts, but open interest continued to rise. So I'm not done thinking that the commercials are not hedging short. I still believe that they are still very much so positioned to the short side until I see capitulation, where I see open interest drop and I see the average net positions of commercials go into the green again. I will still keep on the lookout for some shorts, but be at the same time higher time frame bullish at the same time. I will look for larger expansions on the upside, but watch out. Make sure you have your stop losses, because the moment that there's a trigger, you will know. You'll see really, really big consolidations, really, really big displacements to the downside, right? Geronimo says, what site are you looking for news? So there's a couple of sites that I use. Forex Factory is one of them, and then Market Watch, Economy Politics Calendar. So I try to marry those two. I look for news on those each morning, each week, each morning, right? Okay, so let's go to the daily chart. So we talked about this buy side imbalance here. We know it's still there. We know there's a buy side imbalance down here below the 17,794. Those all could be targeted today or this week with CPI and PPI and unemployment claims. Lots of moves can happen on those days. So 4-hour chart, we took a look at this 4-hour projection, and we could see that we've neared that first half a deviation. I'm going to remove this for now, because from a 4-hour chart, you can kind of see how there's this balanced price range, and then we went down to it and instantly headed up from there. So now we're going to expect to see a little bit of consolidation this week. We do see some price starting to head lower briefly, but for the most part, it traveled down, traveled back up to the new week opening gap, and is going to hold there for Monday. So trading on Monday is going to be probably the least probable for this week. We had a huge range week last week, so my guess is that price will be a little bit fickle in the Monday time frame, and then maybe Tuesday, Wednesday we'll get some better trades this week. One important thing as well. I want to take you back to the real-time hour chart. So this, you see on the chart here, this is a real-time hour chart. You can see the gaps there, right? Liquidity voids. These pink lines are the open and closed from 9:30 a.m. till 4 p.m. 4:30 p.m. I think, maybe. Open at 4 o'clock. Close at 4 o'clock. So we can kind of see how on the previous day we traded down, closed off that remainder of this liquidity void for the most part, then headed up for the remainder of the day. So the question will be now, hey, like, do we start to reach for any of these like outstanding liquidity voids that are waiting down here? Do we trade all the way down there potentially? Well, I mean, it possibly, but there's a lot of balanced price ranges here. So you would need economic events for us to potentially trade all the way down there. Until we see major displacement, we're going to assume that price will continue to go up, and we will continue to assume that we are on side, risk on buy side until we see displacement lower. Now, what does that mean? Well, we are very much so at above an all-time high. And that means, like, if you're going short, you would be wise to look for major displacement before you go short, because at the end of the day, if the market continues to balloon, then that will just, going short will just, add fuel to the fire, because you have to buy your shorts back, right? So until that happens, we are still looking for longs. We're still looking for trades in optimal trade entry. We're still looking for discount buys whenever possible, or balanced price range buys as well. So those are two things that I'll be continuing to watch out for this week. So last bit here. Oops. Let me remove the real-time hour charts down there. Let's take a closer look at ES and the Dow, because those were very interesting. So this is ES. We saw that we took all-time highs last week, right? And that was on Friday. So ES is also at above its all-time highs on the futures contracts. So the question now is, okay, well, all three of our indices, they're trading in the same direction, but let's take a look over at the Dow. So Dow traded higher, but then shot down on its final day yesterday. So there was a lot of selling on the Dow. That is different than NASDAQ and ES, and that's important, because when we start to look at this, we're going to want to take a look at our weekly chart. We still don't see a lower short term. This value here on ES, that's our only weekly short-term low, and that's a higher short-term low than this. So this is the next one that we look for and see if price, careens to the south side here, or if we continue to breach the weekly highs. My guess is that we'll breach the weekly highs first, continue to do that, but consolidate a bit this week. So, yep. So, Gamer X says, "Hey, what's good, Johnny? Is this Ninja Trader you're using?" Yes, that is, yes, correct. This is Ninja Trader. So if you've been on my streams, you know that on my YouTube, if you go to the home channel and you look at these links, Apex Trader Funding is what I use. And when you go to Apex Trader Funding, this should take you straight to here, and this should allow you to gain access. Now they've switched a little bit of this around, but you can still gain access to these accounts here, and this Rhythmic plan goes with Ninja Trader and Rhythmic together. They have TradeEvade as well down here, but they both use these two. This Rhythmic plan uses Ninja Trader in the background. You get it free if you sign up for these plans, right? And this is what I use. So if you want to get there, you can kind of just click on this link here, or open up this link and click on the Apex Trader Funding link. So that's the brokerage that I use. Okay, so back to ES to finish off this review. So on ES, again, we've got a buy side imbalance created. We've got a down close candle here and another buy side imbalance beneath that, coupled with a bullish order block down here. Can we trade all the way down there? Yeah, potentially. Will we? I think that it will be a little less likely that we trade all the way back down there. We would need some pretty big force to trade down there. As you can kind of see, the price traded up here, respected this bullish order block, balanced this price range out, we headed higher. So now we've got this rejection block here, we've got this balanced price range kind of accumulation here. I would look to see if price begins to displace greatly below these 4-hour short-term lows. I'll have to add the new week opening gap to this ES chart, but just notice the difference between how ES looks and how the Dow looks on the 4-hour chart. So notice how Dow is kind of just, it's starting to have a little bit, we're still seeing higher highs except for around here. It's starting to consolidate. So we need to be careful to see if this is a high, and then we start to see displacement lower. This type of, I'll be watching the Dow to see if this leads us with movement lower, or if it just continues to consolidate here. We'll look for the same thing on, and this is on the hourly chart. This is the Dow on the hourly chart. We will look to see if we see this consolidation maintained, or let me get rid of this, or if we see this not be respected. So far it has. So far this bullish order block has been respected there. But once we see price head below here with displacement, that's what I'm going to be looking for to see if the other indices follow suit. Now, I'm not bearish yet, but there is a lot of liquidity down here, and I do think that potentially CPI and PPI potentially could get rid of that. But any discussions on rates, I think that there's going to be a lot of discussions on rates these next few weeks, and yeah, we'll see what comes through this week. All right, so watch these 3 indices quite closely this week. They'll be important, especially since ES passed its all-time highs. You need to be aware that it is possible that we reject, right? It is possible that we continue higher as well. So you need to keep this potential of consolidation or accumulation as a possibility. Generally, you're going to have people FOMOing in with buys as well. So at some point, there's a pain trade where it just continues to rise so much that shorts capitulate. You end up seeing people go net long, but until commercials are positioned net long, I'm still under the impression that I'm keeping my eye out for a big short. So, yeah. So Gamer X, can you go over a rejection block? I think that's in the ICT core content as well. 2016, 2017 content, I think month 4 or 3. We'll review a rejection block, but generally, I think there is one here. Okay, so it'll be easiest to see it is on the monthly for sure. So on the monthly, it'll be easier to see it on ES. So on the monthly chart, you can kind of see how their bodies of these candles reached a certain level and then rejected from here. Same here, bodies reached a certain level and then rejected from there. That's what I'm looking for. It's the bodies, the candle bodies area is a key level. So this goes back to power of 3. Well, open, high, low, close too. Each of these levels I treat as important levels. Each of these candles has an open, high, low, close. Open, high, low, close. So it's really just a combination of opens and closes that are close to each other. That's important because why is that important? Why is that rejection block? So, well, I mean, you can go, I'm not going to dial down into detail because I don't have time for that right now, but go into Inner Circle Trader Concepts and go study that. He tells you everything about what a rejection block is, and it goes in detail too. But in general, it's 2 levels of importance which are quite close to each other, and so the algorithm is going to refer to those levels a little bit more, or potentially could refer to those levels a little bit more. So okay, so I think I'm only going to go to the hourly chart today because we don't know what's going to happen on Monday yet. I don't have enough data for this week. Right now, price is really just consolidating on the 1-minute chart. There's nothing happening, so there's nothing major that you need to be aware of. You just need to be nimble on Monday. Watch where price goes. Look to see if it begins to take out short-term lows on the, at the very least on the hourly chart. Look to see if it takes out short-term lows or short-term highs first. From a weekly power of 3 perspective, there's only a couple of things that could happen, right? Let's say this is your weekly open, right? So there's only a couple of things that can happen on this week. You can either have this week open, have a, like, maybe trade down to maybe here, and then trade higher, and then we close somewhere around here, or vice versa. You might see us trade higher first, kind of like that, and then trade down to take out sell side. It could be even more than that, honestly. To be frankly honest, this could be a trade all the way down to, let's say, like down to here potentially as well. And then we could trade all the way down to here, and then we could even end up like back up here, so you could see an open, high, low, and a close. Those are the only 2 things that can happen. Okay, that's it. That's it. Those are the only 2 possibilities that can happen. So what is most likely to happen? We need to wait for Monday and Tuesday to get a better sense of what might happen and where price might take us. Now, the worst case scenario for you, as we have breached all-time highs, the worst case scenario would be if we have a week where price opens, comes up, shoots down, comes back up, and then ends like here, right? That would be like the most confusing week for you. It can happen during a week where we've taken all-time highs on all 3 indices have been taken. So it can happen. There can be some confusion in the market. So don't discount that. Don't expect to see major moves and sustained moves higher. They can happen, but the likelihood and probability of them happening begins to go down as we start to see ES break all-time highs on its futures contracts, as we start to see the Dow start to rip lower on its charts as well. So keep these areas of liquidity in mind. You can kind of see how down here, we never breached any of these sell side liquidities. So they're still sitting there. At some point, we'll rip down through those. It may not be this week, it may not be next week, but maybe as we start to get into March, we might see some consolidation. So until then, we will assume that we'll have a higher shot of breaching this week's high. So that's what I'm going to look for this week. I'll look for evidence of us retracing to potentially, we've got these buy side imbalances we potentially could reach down into. Let's call that a BISI. So that hourly buy side imbalance I could see as being a potential. Here's a swing move, so a swing high to swing low. And that would put us right around optimal trade entry on the hourly chart. So I like this buy side imbalance here. This would put us, the high of it's 17,967, and the low of that buy side imbalance is 17,944. So somewhere in that range, I like price to trade down to. And I also do like that level. Let me look on the 4-hour chart, because this trades down into this 4-hour mean threshold, or I guess this is a consequent encroachment of this line there. So I'm taking a look from this low to this high, and we want a swing grade template. So that 50% mark is right here. I like that level as a potential optimal trade entry. So I'm going to put that here in a black, black dash line. So we're going to look to see if that comes through, but this is a key level that I like to see. We haven't traded down to it yet, so I would like to see us like maybe jump down to that area, pick up some orders in that hourly buy side imbalance, and then head higher from there. That's in my mind. That's what I kind of foresee price doing, is maybe trading down from here, taking out sell side, continuation, continuing there, maybe treating this like a mini little buy side buy model here. I could potentially see that happening. Because there's a lot of tight consolidations here, which we broke out of. So I would definitely like to see us trade back down into internal range liquidity first before we took out this buy side, if at all possible. So that's my idea, and that's formulating in my head. That's my idea of what price could do this week, right? Can it go short and just keep on going short and blow through all these? Yeah, absolutely. Absolutely. I mean, I'm not, we don't know yet. It's a Monday, right? But we have CPI on Tuesday. We've got unemployment claims on Thursday. We've got PPI on Friday. So Tuesday, Thursday, and Friday are going to be really big movement days, right? Or it could be just movements in the other direction. So keep your eye out. Try to stay nimble. If you're going to trade on Monday, stay nimble. Look for your profit targets of 10, 20 handles on NASDAQ or 5, 10 handles on ES. And you should be fine, So, cool. So I think that's it. Let me make sure I didn't miss anything in the chat. I have seen that video, but I was still confused. You need to rewatch that video probably like 4 or 5 times. I know it can be confusing. It can certainly be confusing. I have rewatched some of the 2-hour videos 5, 6, 7 times and paused it, took notes, tried to back test, try to find evidence of it. Go back in your charts, find more evidence of it. Try to find that, document it. Then I press play again. Pause it at the next concept. Go back to the charts. Look for an example, document it, write it down. Then I go back to the, play the video. It's that level. If you're not willing to go into that level of detail, trading is probably not going to be for you, right? Like, you need to go deep into this material and try to comprehend it on your own too. There was a really good question from one of the folks who was looking through one of my more recent videos I released on Friday, and he asked, what kind of backtesting software do you use? Well, sorry to say, I don't use any backtesting software. I go through the charts painstakingly, reviewing previous day price action, looking for examples. That's the only way I can really codify it in my head so that I know how my model is working. I've seen it working in the past. I know it's likely to work in this scenario, right? That is the only way to do it. You have to put in the time. So you'll get it though. It can be confusing. I'll try my best to explain where I can, but you have to go back and see evidence of it to be able to believe it yourself. So Gamer X, for that rejection block, you have to go back, watch that video again, go back into your chart on TradingView, take a look and see what's going on. Look for examples, look for evidence of things happening. And we're going to take a look at dollar index to close the day off, okay? So there's many examples of this here too. So it's quite interesting here. Let me see this here. So we want to look at dollar index on a weekly chart now. So we did see it reject off of that monthly fair value gap, inversion fair value gap like we expected. Whether or not price goes down on dollar index or goes up is anyone's guess, but we did take out these relative equal highs here. So that would be the dealing range which we were in at the time on the weekly chart. So in my mind, I see this as a market maker sell model, stage of accumulation, and I still see room for dollar to come down, take out this low, and take out this low as well. If it does, that would support my bias to the upside. If it does not, if markets have treated this as displacement higher, return back to fair value to head higher, and then we're going to trade up beyond this inversion fair value gap, and then to take out these relative equal highs. If that's the case, that's painting a very poor picture for us to go long, because as dollar index rises, generally indices are moving lower. It's inversely correlated. So far this past week, indices and dollar index have not been correlated. So markets are trying to figure out where they want to go. So it is lower probability. Also, we're in the smack dab middle of a range too. We're in this dealing range. We're in this larger dealing range within the past, 60 days or so. This is the ultimate range that we're in right this moment, and we can kind of see we're right in the middle. We traded to a sell side imbalance on the dollar weekly chart. So my thoughts are we head lower first to aim for internal range liquidity if we are going to head higher. So what does that mean? On the weekly chart, you can see there's this buy side imbalance that remains here. There's a tiny little buy side imbalance here beneath this here that we could trade down to. But generally, I'm looking for dollar to head lower, indices to head higher. A lot of Middle East news and election year. Dollar has me lost. Yes. Jay Whitway brings up a really good point. Election years are really strange years. They are the only years that almost they have less probability of following trends that have occurred in other years, in traditional non-election years. There's a lot more manipulation involved, and you just have to be a little bit more careful. The algorithm will still seek out liquidity, but you might have a few more things where, if there's months that have a tendency to be bearish, but then you see the market careen bullish, there could be things like that happening. But at the end of the day, make sure that you use seasonal tendencies as a potential, but not a panacea, not a end all, be all, right? So we will still watch dollar index. We'll see if it correlates to our markets moving higher or lower, or I guess inversely correlates to our markets moving higher or lower. And then we'll have to see what happens. At the end of the day, if you want to be most safe, you can wait till Tuesday, Wednesday, Thursday to trade. And then I think Mondays and Fridays will be a little bit more difficult now that we've reached ES's high. We are much more prone to have a consolidation tug of war between longs and shorts now. So I think this week we're going to get a little bit more consolidation than we would like. So be careful this week. Watch out for those short all-time highs that got breached. Watch out for those key levels, because there's going to be a lot of price waiting to be mitigated at those levels, right? So you want to keep your eye out for that. So that's where we're at this week. I will be same deal. I'll be looking for trades in the morning. New York Open Kill Zone is my jam right now, since I have to go to work on Tuesdays and Thursdays. But yeah, we'll be around on Monday though. So tape reading for you on Monday only. Awesome. Yeah. I'll do the same thing. I don't know if I'm going to take a trade, if there's going to be a setup forming. I have to wait and see what happens after Asia. I just don't know what's going to happen. I mean, it's a huge week. And somebody else asked me, hey, when do you know when not to trade the first couple days? Well, it's when we have these huge weeks here. Like big range weeks is when I generally look to not trade in Mondays. If I see a trade, I might take a low risk one, but I'm not going to be risking heavy amounts this week. Last week was a gimme. I knew it was going to happen. I said multiple times, ES is a six sister. This is a six sister concept. It has to catch up to NASDAQ. And what happened? It caught up. So it has to catch up to NASDAQ. It has to catch up to the Dow. And now it's caught up. So everything has created a higher high on a monthly time frame now. So remains to be seen what happens next. Consolidation typically would make sense. And then where price decides to go is anyone's guess. We are at all-time highs. We are in uncharted territories. So generally, we assume it will go higher until we see otherwise. So, and that's, my friends, is what we're going to leave you with today. I hope this was helpful. Let's watch and see how price turns out today, and we'll we'll trade disciplined. Look for your trades. Look for your trades to set up. They can still set up on a Monday. Just this particular Monday, since we have so many things later on this week, if your moves are done, try to be done trading by 11, or if you're going to look for a afternoon one, as long as the morning has not ranged. As long as the morning has not ranged, then you can look for a trade in the afternoon around 2 o'clock. But if it has, or if it has like gone huge, like parabolic in the morning, just forget about the afternoon. It's going to be a garbage afternoon. If it consolidates in the morning, chances are your trade's going to be at the 2, 3, 4 p.m. time frame. So, that's it, folks. I need to go drink some water and head to get ready for bed. But it's good hanging out as always. Hope this was helpful. If this is helpful, smash that like button. And I appreciate it. It helps the channel out. And hopefully this was helpful. And it's good seeing everybody. Make sure you get some rest. Stay hydrated. We'll catch up on Monday. And we'll read some tape. All right? Take care, everybody. See you soon.